What's up, everybody? My name is Josh Bennett with Mr. Money Sense TV. In this episode, I want to go over 5 tips that can skyrocket your credit score quickly. This can boost your credit score 100 plus points if done properly. And this can be used whether you're in a more dire situation where your credit score is just kind of bottom of the barrel and you're looking to start increasing that to where you can get some outstanding credit. Or this can also be used if in a situation where, say, you're just a couple months out from buying a house and don't want to get a mortgage with a credit score that may be slightly below where you want it to be, and you want to get that perfect or great credit score before applying for that mortgage. These 5 tips can help. Now, before we get started, if you like receiving tips on how you can make more money, grow more money, or keep more money, make sure you subscribe to this channel below. And also, if you find this information in this video helpful, please give this a like. It helps go a long way towards growing this channel so I can provide you more valuable insights. So step number 1, or tip number 1 to increase your credit score is to this may seem pretty basic, but it's to have a outstanding track record when it comes to making on-time payments. So making on-time payments to whether it's your credit card, your student loans, your mortgage, whatever the case may be, that track record of on-time payments actually accounts for 35% of your overall credit score. So if you're trying to boost your score, one of the easiest things to do is just make sure you're paying things on time. And this actually works in backwards as well, because if you miss a payment or have a late payment, it can also drastically impact your credit score to the negative side of things. So it kind of defeats the purpose to be working hard to boost your credit score if you have a late payment or a missed payment, just because it's going to counteract everything that you've done to do right. So you want to make sure that you make on-time payments. These days, most credit cards, most mortgages, most student loan providers, any of these lenders, just because they want to make sure they're getting paid as well, actually provide you an opportunity to do automated payments. So, for example, you can go to your credit card and set up an automated payment where just every month that money comes out of your bank account to pay either the minimum balance or whatever they require to give you that good track record. They allow you to do that without you even thinking about it. So you don't have to sit there and think like, I need to make sure I make this credit card payment or I'm going to get dinged. This can just happen automatically. And that's a great tool to use to make sure you're having those on-time payments no matter what. Tip number 2 is to keep a low credit utilization score. So first off, what is a credit utilization score? So a credit utilization score is just how much of your available credit are you using. So for example, say you have a credit card that gives you $10,000 that you can use as credit. Well, if you're using $5,000 of that $10,000, so you've gone and spent $5,000 on some new TVs or whatever the case may be, that $5,000 of that $10,000 means you have a 50% credit utilization score. So that means you're using 50% of your available credit within that credit card. And so how credit utilization works is it actually looks across all credit cards and all loans. So for example, where this can impact you is, say you have multiple loans that have, or multiple credit cards that have different credit utilizations. Well, if you have some that have high credit utilizations, that's actually going to count negatively against you. So what's the ideal credit utilization to have? Below 25%. So make sure you're keeping your credit utilization below 25%, because that's the number that banks want to see, and for your credit score that they want to see to kind of prove that you're a responsible payer. And I don't know why they came up with that 25%. It seems kind of counterintuitive that they would give you $10,000 available credit and only really allow you to spend 25% of it. But basically what they're trying to do is determine if you're a responsible borrower of money. And if they see you using all of the amount that they're willing to give you, to them it signals like desperation. They believe that if you're using all the credit that's available to you, that you may struggle to pay that back. So keeping that low credit utilization looks very good, and that is actually going to take steps to boost your credit score. So another factor to consider with credit utilization is actually, it doesn't necessarily matter the actual amount that you're borrowing. It just matters what that score is. So for example, say you have a $10,000 credit card, or a credit card that has a $10,000 limit, and then you have a $1,000 limit over here. Well, you can have $5,000 on this credit card with a 50% utilization score, and $750 of that $1,000 on this credit card, and that's a 75% utilization. This actually looks worse for your credit score, believe it or not, even though it's only $750 versus $5,000. Just because this is a higher credit utilization, this is actually going to ding your credit score more than this will. So, moral of the story, if you have multiple credit cards with multiple different balances, you may want to use the credit card that has the highest balance as your kind of go-to credit card. Just that way, on any given day, you can keep your credit utilization lower, regardless of what you're spending money on. So tip number 3 actually kind of goes hand in hand with credit utilization. So tip number 3 is to actually go to your bank and ask them to increase your credit availability or your credit limit. So a lot of banks will allow you to increase your credit within the credit card, like more than what you were originally given, especially if you have now a track record of paying that credit card off either on time, in full, or just making sure you're making those minimum monthly payments. Well, banks will reward you for that if you have a strong track record. So they'll actually be willing to negotiate with you and increase your limits. So a 15 to 30 minute call can increase your limits on your credit card, which does a couple different things to improve your credit score. One, a big factor of your overall credit score is how much are banks or lenders willing to give you. So if you have a lot of available credit, that signals to banks that you are a responsible borrower. And so if other banks are willing to lend you money, then a bank that you're going to for a mortgage or whatever the case may be, they view that as a good sign. So by increasing your limits, then it's actually going to improve your overall credit score as well, because it signals that banks are approving of you when it comes to your ability as a borrower. So that also has an effect when it comes to your credit utilization scores, obviously, because if you have a higher limit, it's going to make it easier to make sure you're staying under that 25% credit utilization score. Tip number 4 is to keep old credit cards open. So you may have heard myths or rumors or just be scared about closing credit cards because you've heard rumors that if you close a credit card, it negatively impacts your credit score. That is true to an extent, but where it really impacts is if you close old credit cards. And the reason that it impacts is because a credit score looks at your past 7-year track record of making those on-time payments. And so if you have a credit card that has a long history of making on-time payments, well, if you get rid of that, you lose that benefit of the 7 years of on-time payments. So now the pool, so say with the 7-year, you made several hundred on-time payments, and a new credit card, you may have only made 3 on-time payments. Well, if you get rid of the old one, it takes that pool and shows now it's only 3 on-time payments as opposed to several hundred. So what it does is it takes away that overall pool or number of on-time payments. So it kind of lowers your threshold to be approved as a responsible lender, if that makes sense. So keeping old credit cards open is incredibly important when it comes to making sure that you have a strong credit history. This actually accounts for about 15% of your overall credit score. So make sure you keep those old credit cards open. It's okay to close like a credit card that may be only a year old. So say you want to, you bought or get a credit card to take advantage of some frequent flyer miles or something like that, and you want to close it out before you get an annual fee. That's really not going to impact your credit score. Whereas if you have had a credit card since childhood that has a strong track record, that very well could impact your credit score. So do some due diligence before you close cards, and just make sure you're closing cards that aren't going to have a negative impact on your credit score. So those more short-term credit cards, for example. Tip number 5 is actually to correct mistakes. So this may not come as a surprise, but the credit bureaus that actually monitor your credit score are huge organizations. So they're big bureaucracies and they can make mistakes. In fact, it's been estimated that about 90% of people, when it comes to their credit score, have mistakes in their credit file. So if you go through a detailed report of your credit score, you may very well find a mistake on yours. That mistake could be negatively impacting your overall score. So what you can do is, if you find one of these mistakes, you can actually go to the credit score provider and get that removed. So there are like application processes for getting mistakes removed off your profile. And that can create an immediate jump in your score by just removing a negative impact that isn't actually you're doing. So make sure you go through to check, and all the credit bureaus they're required by law to provide your credit score to you at least once per year. So if you haven't done that this year, you can easily go to, say, Experian and request your free credit score to look for mistakes. You can also go through like freecreditreport.com or a lot of these other institutions that allow you to look at your credit score and look for mistakes to see if there's anything on your profile that you need to correct. So make sure you go through and do that. And the application process to get those corrected is pretty simple. You just really send a letter to the organization explaining and what the mistake is and why you need it removed. And then they'll guide you through the process of getting that removed. So hopefully you found all this information valuable. Again, if you found this valuable, please give this video a like. We'd also love to hear from you in the comments if there's issues that you've bumped into when it comes to your credit score or questions that you have. We'd love to create a dialogue within the comment section. But again, if you want to keep more money, grow more money, or make more money, make sure that you